Uganda manufacturers last week issued 8 new positions, through which they are justifying their pursuit of relief from government, with among others an incentive against paying a 30% capital gains tax.
Again, to augment the issue of sourcing of capital. Now, in Uganda, if you wanted actually to sell off shares today, the person who must buy your shares must pay 30% capital gains. Now, this is so funny for us because we're in a situation where we need further capital into the economy. Now, to attract this capital, we need to incentivize investment in Ugandan actual shares.
But the Uganda Revenue Authority now says it will not be possible to relieve the troubled manufacturers of that tax break, reasoning that securities market remains an option.
I believe there are some advantages to mobilizing equity using the capital market. You get some better tax breaks, and you also get, I think, also you're able to attract the kind of partners that you want. If you're serious about investing in a particular economy, you need to look at the dynamics or the essentials that will make that business make sense, and therefore afterwards determine whether the tax actually adds or subtracts to your profitability. And I think those are some of the issues that we need to consider.
Speaking during a dialogue with several state and private sector players on compliance and governance, visiting Safaricom CEO Bob Collymore also regretted the impact of corruption on businesses.
It's not about the size of the tax that's the problem, it's the unpredictability of a tax regime in any country. So you tell me you're going to give me corporation tax of 60%, I can do the sums, I can figure it out. If you tell me that the corporation tax is 20%, but the corruption tax is variable, how can I possibly run a business? I don't know what I'm working with. And so, as CEOs, the role of leadership is very different.
Reina Ojon, NTV Business.